Hello traders, welcome to your daily market update for Monday the 27th of April 2015, and we kick off the week which is going to be a relatively quiet week in terms of economic data. Here we are in the calendar, and as you can see I've just put the filter on for the highest risk of volatility, and as you can see we don't have a lot. We've got the RBA Glenn Stevens speech tomorrow, and that's going to be very interesting to see what happens on Tuesday Australian time, and also following that on Wednesday with the New Zealand. It's going to be interesting just to hear what the outcome is, but also what the monetary policy statement will say. The Fed interest rate decision, everybody's focused on that, but the market has really priced in there's not really a great chance of an interest rate rise in April, so that's not really going to be the major focus. The focus will be any information coming out towards exactly when in the future, because anywhere from June to September is where the market is speculating. As we move closer and closer to the date, the more it's getting pushed out later and later, and the market really would have to be more inclined to say September at this stage. So this week's going to be about the US dollar, and it's going to be about the lead up to that interest rate decision and any comments from officials and data that comes out in the meantime. So I think that this week we will be still fairly active in the markets, and I think that we'll have to keep on our toes and just follow the news to see what's coming up. As you can see tonight, we do have a little bit of PMI services, and that's really that will kick off the week in terms of the US dollar speculation and where it's headed to in the future. We don't have a lot in the European session, so I think that it's going to be a slow start to the week, but then from the US session we'll kick into gear. And then we have Tuesday also, we continue to see some data rolling out. So this week we do have some data that the market will be focused on. Of course, Greece isn't out of the picture yet either, but that'll continue to bubble in the background, but I think the US will continue to be the focus. If we go to the dollar index chart, as you can see here, the major support is still held up, but we have broken the 50-day moving average, which, if I zoom out for you, historically has remained support. So I'm still not a big long-term bear in terms of ready to start short selling the US dollar yet. We have definitely made a lower high, and we are in a consolidation phase, that's for sure. And I wouldn't say that we're bearish until we break this support. Just because we're below the 50-day moving average isn't enough for me to jump in the bear camp yet, because we've had, yes, a pullback, but by no means have we made lower highs, lower lows yet to take out sort of the major level. Yes, we've taken out this one here, but I think the whole market is really focused on this level here. And I think this week we will get either a break through that or a bounce off it, depending on how we go with the Fed and the US data leading into this week. Moving over to the charts, the New Zealand dollar, as you can see, we do have a rising wedge pattern forming here. We do have higher highs and higher lows. So overall, we are going higher. It does point that we did have a little bit of a pullback, but we've now found a little bit of support with the US dollar weakness, and we're ready to go again. And the next major resistance level is still 77 cents. 77 cents was support over in this region. It still remains resistance today. So a break above 77 cents would be major. The Australian dollar has bounced off 76.8 cents, and that is holding it up for now. We have and are trading above 78 cents, and that's going to be key. The major level for me would be to take out 79 cents and close above it on a daily, because for now this is really just a sideways consolidation pattern, and I want to see really what happens with the US dollar before I start becoming an Australian dollar bull. And I think that with the comments coming out from Glenn Stevens, we could see it actually get jawbone lower, but we'll have to wait and see what happens. The euro, we can see here that the euro has bounced, and it's getting a little bit of momentum here the last two trading sessions. That's purely on the back of Greece getting an extension, and people are just a little bit relieved that they didn't default, and they are going to get a little bit of grace. But the major resistance level of $1.10 is still holding up. once again, I still believe we're in a consolidation phase, so don't be trying to pick some big long-term trends just yet. Just be doing some short-term scalping, pick up the money, and ride the wave of emotion that the European gossip flow is definitely pushing it around. The Great British Pound is very interesting. We're testing the downtrend line. We have broken above it and closed above it, but we're also just ran up to the 50-day moving average and the $1.52. So we have a lot of point of convergence right now. So the point of convergence would be $1.52 is an even whole round number that historically has offered resistance and likewise support over here. Also the downtrend line, yes, we're above it, but give or take, I'm still calling it testing the trend line, and we're testing the 50-day moving average, which a lot of technical chartists were actually following. So there's a lot of pressure around this area, and before I really jump on anything, I'm really interested to see how the market reacts. So I'm going to be patient with this one, but I'm going to be watching it with a very keen eye and see what happens with the pound. And the rally has really come on the back of US dollar strength, but also the UK officials mentioning that the next move will be an interest rate rise. So whether that momentum can follow through, I think is all up to the US dollar. The US dollar versus the Canadian dollar, we've seen here the bounce after these big falls and the break below $1.24. We bounced and then we found resistance here at $1.23. We are now in between $1.23 and $1.21. A break of $1.21 could definitely open it up to really bleed lower. The US dollar is going to be the driving factor here, as well as oil, as it always is. And if we continue to get US dollar weakness, I think that this is definitely a great way to get exposure to that as well, especially if we break this level. There's going to be a lot of people looking to short that. The US dollar versus the Japanese yen, we're still holding up. We're in a sideways pattern, as I mentioned, and you're not jumping on any long-term trades here, expecting to get a big long trend. We are consolidating and have done for a very long time. So you just need to keep an eye on the key take profit and resistance levels and continue to trade it. $1.19 continues to be where the market's attracted to. It seems to be the equilibrium point. Sometimes we'll break a blow it, get sucked back up in it. As soon as we get too far away from it, we get pulled back to it. So for now, $1.19 seems to be the level. We do have some major support at $1.18.5. Well, that's it from me today. Keep an eye out for the price action from around the news with Glenn Stevens in the morning. I'll be back again tomorrow with my daily video. Don't forget, if you are interested in trading with me throughout May, you only have 48 hours to get hold of that deal, and once it's gone, you'll have to wait, and from that point on, you'll have to start paying for my strategies and things like that. So go to forexnationtv.com and have a look at, and if you are interested, sign up straight away. Until tomorrow, trade well.